Good evening. Before we look at today's signal, let's talk about what's keeping me up at night. Welcome to the VIXShield Daily Market Summary, Market Close Recap for Thursday, April 23rd, 2026. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution, signals only. Past performance is not indicative of future results. In this episode, we review exactly what happened in the cash close, walk through the volatility picture, and examine the live signal our models issued once the bell rang. The S&P 500 closed at 7,108. That marked a modest retreat of roughly 0.4% on the day. Meanwhile, the CBOE Volatility Index, known as the VIX, settled at 19.5. It jumped almost 2 full points from yesterday's 17.5 close. That puts it 5.1% above its 5-day moving average of 18.5. Step back for a moment and look at the term structure. The 3-month VXV sits at 21.6, while the spot VIX is at 19.5. That leaves the market in contango by just over 2 points. Contango simply means longer-dated volatility is priced higher than near-term volatility. For iron Condor traders, this is the calm, normal state that usually favors time decay. Yet the curve has steepened slightly in the last week, which tells us the market is bracing for a bit more uncertainty over the next 1 to 2 weeks. Our ALVH protection layers are already positioned at full 3 out of 3 allocation to absorb that extra risk should it materialize. Cross-market color painted a mixed picture. The dollar index rose nearly 0.8%, supporting the idea that some safe haven flows were at work. Bitcoin climbed over 5%, while Ethereum gained just under 2.5%, diverging from the equity pullback. Gold slipped almost 2%, and crude oil surged more than 7.5% on renewed geopolitical tension headlines. Taken together, the tape felt like cautious risk on in spots, risk off in others. And here's where it gets interesting. Today's headlines tried to tell 2 different stories at once. Earnings and a ceasefire extension helped push several indexes to fresh records earlier in the session. The Dow rose 365 points at one point, and the Nasdaq touched another all-time high. Yet the S&P 500 gave back ground into the close. Behind that move, you saw profit-taking after IBM dropped 8% and another name fell 16% on disappointing results. Opinion writers noted that cheap options are pricing big post-earnings swings next week for several tech giants. Which brings us to the calendar. The Chicago Fed National Activity Index and an upcoming Fed interest rate decision sit on the horizon. These are exactly the data points that could widen the VIX curve even further. Taken together, today's headlines told the story of a market still digesting earnings season while keeping one eye on geopolitics and policy. The intraday volatility spike we saw late in the session was no accident. It reflected that tension. Now let's look beneath the surface at volatility. The VIX finished at 19.5 after rising almost 11% on the day. That reading sits squarely inside the 15 to 20 caution zone we have discussed many times. Realized volatility over the last 10 days is only 10.4%, well below the implied level. In plain language, the market is paying up for protection, even though the actual price swings have been modest. Our expected daily range indicator came in at 1.28%. The entry gate was met because the VIX stayed below 20 and the range stayed under 1.5%. That combination unlocked a place signal for the first time in several sessions. Remember Monday's week preview? This is where those thresholds matter. Now, the strategy insight for today. The rules were clear. VIX at 19.5, elevated but still below 20. Conservative tier is green. safe to place. Balanced is yellow, tradable, but sized down if you are cautious. Aggressive is red today, blocked per our VIX rules. The signal engine issued a place verdict because both the VIX gate and the EDR gate lined up inside acceptable territory. Our three ALVH layers remain fully active, standing guard against any spike that might follow next week's heavier calendar. The theta time shift is in forward mode, targeting 7 days to expiration. That extension lets us capture additional vega, while the term structure remains in contango. Had conditions been tighter, we would be on hold, but today the structure we watch for became eligible. For those following along, the conservative iron Condor sits at 6,985, 6,990 on the put side, and 7,290, 7,295 on the call side. Net credit 65 cents. Maximum loss $435. The balance tier is 5 points wider on each wing with a credit of $1.10. These are RSAI verified levels. Our rapid skew AI engine cross-checked the strikes before the close. Execution window remains 3:05 to 3:15 Central. This is not a recommendation, simply the live illustration of the methodology. Discipline matters most when the gate finally swings open. Many traders chase every green light. The seasoned ones remember that 19.5 on the VIX still carries downside risk, especially with fresh economic numbers on deck. Protect the capital first. Size conservatively. Let the ALVH layers do the heavy lifting if volatility decides to test us. That measured approach is exactly what separates surviving from thriving across market cycles. Tomorrow we watch how the Chicago Fed data lands and whether any fresh headlines tighten or loosen the term structure. Keep an eye on the 7,100 level. A decisive break lower could push the VIX toward the low 20s and flip us back to hold. If you found today's summary valuable, share it with a friend. Both of you will receive 14 extra days of free trial access to the full VIXShield podcast and signals. Your personal share link is waiting for you in your member dashboard. This market summary is brought to you by VIXShield, your protection against daily uncertainty. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution, signals only. Past performance is not indicative of future results. This is VIXShield, your daily protection against market uncertainty.